My keys to trading volatile markets. And we'll go to the charts to look at the E-mini S&P 500 and crude oil. Let me take you to this week's NinjaTrader Charting Edge. While everybody's talking about equities, and rightfully so because they are very busy, one of my favorite setups is happening right now in crude oil. So here we are with the crude oil futures on a daily chart. Same old with the indicators. 20 period, 3 standard deviation Bollinger Bands. Red is the 10-day simple moving average. Gold is that middle Bollinger Band, the 20-day moving average. First, I want to talk about where we came from in crude oil so I can show you where I think we're potentially going next. We talked about crude oil a lot in the show over the past several months. And one of my favorite looks is what? When the mouth of the Bollinger Band is open and we're hugging the bottom or the top Bollinger Band and we're above or below the 10-day moving average, I like for the market to trend in that direction until eventually we get to what? Some of the previous Bollinger Band peaks. So we saw a little bit of a down move here in crude oil, then a consolidation back above the 10-day moving average, and you can see the mouth of the Bollinger Band has been opening, and we've been grinding steadily above that 10-day moving average. As I said, I like to use the peaks of the Bollinger Bands as potential targets. I consider those peaks really unfinished business. So during this down move here, we had the Bollinger Bands spike up and then come back in. You had a bottom peak right around 56.50, and you had a top peak right around 92. Once we started to come back in and we regained the 10-day moving average and grinded up, to me, that was a potential target only when what? When that top Bollinger Band takes out the previous peak. That now gives me a green light to say, you know what? This is probably imminent. So what I look for is a way to trade that and really be very tight with my stop. So I like the 10-day moving average. I think you could use really even a shorter term one, maybe an 8 or a 5-day moving average for this guide. I'm going to be using the 10-day for this example. If we continue to hold above it without any daily closes below it, because we've not had a daily close below the 10-day moving average yet this year, so that's really my stop. I'm wrong with a daily close below it. And I think that target of 92 becomes imminent now. It's really a green light bull mode for me here in crude oil. It really has been for a period of time, but now I have a really solid target because once again, when that peak up there gets taken out by the Bollinger Band, when we're going up above the 10-day moving average, that really is, like I said, a green light for me to be long. Wrong with the daily close below the 10-day moving average, target 92. That's what I see right now in crude oil. I talked about in my intro some of the keys that I look for when trading volatile markets, and I put this tweet out the other day. Everyone can tell you right now to be patient and disciplined, but in this type of volatility, if you didn't do your preparation to know what you're looking for to get in or out of the market, you have no idea what to be patient or disciplined for. And every time we get busy, all of these talking heads, all of these gurus out there will come out and say, be patient, be disciplined. But if you don't know what you're looking for, you can't be patient. Maybe some days you should be impatient. But you can't also be disciplined if you don't know what you're going to be disciplined to. So now I'm going to share with you some of the keys that I look for when the markets get very volatile. Let's go to the E-mini S&P 500 daily chart. First off, what is the first thing I look for when markets start to get busy? What is the environment? In one of my previous shows, I talked about not looking for a bull market or a bear market. What is the environment for your strategy? As you know, I talk about it every week. My tool for that is Bollinger Bands. Here we are with E-mini S&P 500 here on a daily. Mouth of the Bollinger Band is open. We're below the 10-day moving average. What have I said many times on the show? When that happens, when that mouth is open and we're above or below the 10-day moving average and we're hugging that top or bottom Bollinger Band, that to me is the environment we are in. Right now we are in bear mode because that mouth is open and we're staying below the 10-day moving average. So I really look at that first before I even go to look at my short-term daily charts. Now I'm going to take you to an E-mini S&P 3-minute chart. So here we are in this very short-term chart. And for me, one of the keys when markets get really volatile is lower my time frame on my chart because my risk cannot be managed on a larger time frame. A lot of times I'll use daily and then 60-minute charts to execute my trades. But when we get really busy, I'll go as low as a 3-minute or even a 1-minute to see how I can best manage risk and take advantage of these moves. Because remember, it's just about price action, right? In normal environments, we're not going to see this type of movement on a day in, day out basis. So the busier we get, the shorter the time frame I use. Now, that doesn't mean that I'm going to be a lot more active. It just means that I need to find areas where I could get in and out and take advantage of price action. So what am I looking for? Same thing that I look for on the dailies. Here in a 3-minute chart. First, let me talk about something that I'll be looking for based upon the daily chart. The daily chart told me what? Green light short. We are in a bear mode right now. So what do I look for when I'm on the 3-minute chart? I look for the same thing I would look for to get short in the E-mini S&P potentially on a daily, but I'm now using a 3-minute time frame. What would that be? Anytime the mouth of the Bollinger Band is opening and we're hugging above the 10-day moving average. In this chart, it's the 10-period moving average on a 3-minute, so it's really only a 30-minute moving average. Anytime we're hugging above that and the mouth of the Bollinger Band is open and the Bollinger Band start to come back in and we get below that 10-period moving average, that to me indicates a short-term top. So now what do I look for? I look to get short. It's the opposite of what I'm looking for on the daily. And what I mean by that is on the daily, right now in the S&P, the mouth was open, we're hugging below the 10-day, I want to stay short below it. Now I take that thinking and I flip it, and when we're going up on an intraday move and the mouth of the Bollinger Band starts to come back down and we get below the 10-period moving average, that's a trigger for me to get short until when? Until the mouth of the Bollinger Band starts to close back up and we get back above the 10-period. So to me, this allows me to capture the ebbs and flows of the market, and I'm only looking at one side of the market right now. That's the short side. Why? Because that's what the daily told me. So I don't get caught up in all of this. I just wait for rallies above the 10-period moving average. The mouth of the Bollinger Band starts to close. We get below the 10-period moving average. That's a trigger for me to get short. Most of the time, I'm just going to lean on that recent high, put a stop above it, and try to stay with it until we go down and the mouth of the Bollinger Band closes. We get back above the 10-period moving average. Then I look to cover. I don't look to get long on those. Why? I don't look to get long on them because the daily told me just to look at shorts. So I really widen this out so you can see a few days of market action. And like I said, everyone's talking about being patient and disciplined. But how do you do that? I am just simply sitting back, waiting and saying, well, we finally got a rally here and we are hugging the top Bollinger Band. We're above the 10-day moving average. Mouth Bollinger Band closes. Boom, now I'm looking to enter. So one of my keys for position sizing in this type of volatility is really going to depend on how far away we are once I get that trigger. One of the keys to trading volatile markets is knowing that I'm probably going to have to trade a little bit smaller because my stops are going to be wider. So I'll take my position sizing down, still leaving me with relatively the same amount of risk I would take on a bigger position. But because we're so volatile and the stops are wider, I just start to trade smaller. A lot of you can go and use the micro E-mini S&P for this type of strategy to allow you to scale in and scale out. Because when it gets this busy, I don't want to be super price sensitive. So I like to be able to scale in once I start to see us below a 10-period moving average and that mouth is coming in. And I put all of my stops above that recent high, and I'll look to scale in and scale out the whole way until that mode changes. Once again, Bollinger Bands come back in, back above the 10-day. That's an all click out for me. But I like to trade in and out of a core position because you don't know how much of a move you're going to be able to get. A lot of people try to really predict or look at support and resistance when we get this busy. I've learned that to me, support and resistance, we end up going through it, above it, and below it by so much more than we really thought would happen that I like to use something like this when we get this busy because this is really in the now, right? We're going down. I don't know when that move is going to stop. I don't know if we're going to take that low out. That might be previous support, which in this particular case, it did hold that previous low, but I don't know that. So in the moment, the only way for me to execute is when the mouth of that Bollinger Band closes, we're above that 10-period, cover. So to me, two of the keys are knowing that you're going to have to shrink your position size a little bit because stops are a little bit wider, and know that you have to scale in and out and allow this trade to work until it tells you not to be. Then you need to be impatient and cover. Remember, traders, micro Ether futures are now live at CME Group. Symbol is MET, and they are 1/10 the size of 1 ETH. To learn more, go to cmegroup.com. Just a quick recap of some of my keys to trading volatile markets. First off, know the environment. That's important for all times that we're trading, but when we get busy, I like to really focus on that one single side of the market, and that starts with your longer term chart. I don't care if you're intraday trading both sides of the market. I still believe that you need to know the overall theme of what's happening on the bigger picture to help you decide which side of the market you want to be a touch more aggressive on and a side that you want to be a touch more active on. And that all starts with that longer term daily chart like I used today with the E-mini S&P. Next is don't always rely on support and resistance when we get really busy. I like to use Bollinger Bands or whatever indicator that you would choose to identify ebbs and flows of the market. When I've used support and resistance when the markets get really busy, they tend to go well through the support or resistance much further than I ever thought. And a lot of times that'll hurt me getting in and getting out because I'll over anticipate both sides of the market. When I use an indicator like Bollinger Bands, I'm more in the now. When that mouth is open and it starts to close, I feel like the trend has changed in that short time period that I'm looking at. And I also talked about one of the keys is position sizing. Go into the day recognizing that you're probably going to have to be trading smaller and your stops are going to be wider. The price action is busy. So the busier it gets, I recognize I have to give my trades room to work. So I'm going to be a little bit smaller. I'm going to be a little bit less price sensitive and do more scaling because there's no way I'm going to actually pick a price perfectly. So I know that going in. That's why I like to get in and out of my positions and really use those simple moving averages to help guide me because as long as they stay below them or above them, I know exactly what I'm looking for and that helps me be patient and disciplined. I put this tweet out the other day. During volatile times, you have to be hyper focused on your game and slow everything down around you. Don't get caught up on the why, focus on the now. This is why I really like Bollinger Bands as my primary strategy because it keeps me in the now. I know exactly what I'm looking for. I talked about when the mouths are open and we're hugging above the moving average. I know I'm not in any hurry to be short, so I can be patient there. I'm in the now. When that mouth of that Bollinger Band closes, like I showed you on that 3-minute chart, and I know that I want to be short because that's what the daily showed me, boom, I become impatient and I get in. And that to me is so important about being present with the market, right? Being in the now and what's actually happening right now. This is one of the main reasons why when it gets busy, I like to use indicators a lot more than I like to use support and resistance because they are reacting off the price action. And remember, you're not going to pick the perfect high. You're not going to pick the perfect low. Forget about that. But the indicators help guide you when the markets get really busy. Traders, I want to hear from you. Let me know what you thought about today's show. Did you like it? Give me the thumbs up. Did you not like it? Give me the thumbs down. Either way, put your comments down below. Never miss an episode of Develop Your Edge. Hit that subscribe button right there. Now, if you want to DM me and send me a question or a comment, you can hit me up on Twitter at Anthony Crudele. And don't forget to check out Instagram. I say this each and every week. Instagram's got a lot of different stuff going on, different from what I'm doing on Twitter. So you can check me out there at Anthony C. Crudele. That's a wrap for today. See you next week.